Yo, what's going on, guys? We got a webinar here. May 26th, 2024. We got your boy Uzi, Johnny. Enigma is not here, unfortunately. But let's get this going.
What up, boys? I'm gonna start off with my own topic. I'm gonna try to get you guys as close as I can to the what I discovered, which is something that will completely change your perspective on the markets. It's something beautiful, but unless you do the work, unless you put in the work, it will not make sense for you. And you will find what I'm saying right now, some of the bullshit you see out there. But unless you put in the work, it will make sense. And if you're here to get spoon fed, please do not join the group. Do not be in here in the first place. I want hard workers, critical thinkers. I want everybody to go in there and look for what I'm about to give hints. All right, I'm not gonna spoon fed in here. I'm gonna give clues. All right, and y'all have the rest. All right. I'm not, I don't have anything. I'm just purely gonna use price action. I purely use the charts, naked charts, and y'all will understand the logic behind what I'm saying right now. All right. All right. Let me share my screen real quick. Share screen to. All right. Let me know if you see Ziffy. All right.
Yep, we're good, brother.
All right. I want silence. All right. And I want everyone to focus up in here. For me to start. Keep the questions for the end. All right, I'm gonna present the beauty of the 6 hour candle. All right, why the 6 hour is so important in your trading, and why is it better than even the 4 hour? Why is the 3 a.m. a key candle or a key candle and a key time in London? All right, why is reversals at 3 a.m. a key time? All right, what happens and what happens at 9 a.m. And it happens to be 3 and 9, and I always preach 3, 6, and 9, right? Which is as close as you want to be. You can actually identify 3 and 6 and 9. 3 a.m., 6 a.m., 9 a.m. are the key to have a full daily range, right? I will give you today 3%, all right, what you should be knowing about 369 and PO3 within this specific candle, the 6 hour 6 a.m. candle. You'll find what you've been looking for, right? Such as determining bias, uh, catching a whole higher time frame candle expansion, right? For a lower time frame risk, using using key times. So you're catching a higher time frame expansion using a lower time frame risk, using only time and candlesticks, right? Knowing when and when not to expect low of day and high of day to be put between 6 and 9. Right? Having an Asian range inside an Asian range. And please, while I'm speaking, take notes. Right? I'm not gonna repeat twice. We're gonna have an Asian range inside an Asian range. Knowing when to expect, all right, an expansion candle or when to expect chop, all right, is purely by using this. The 6 a.m. candle is the true key of these markets. All right. And you should implement time and importance of waiting for time. If you want to catch an expansion, all right, your goal in trading in the first place is to catch a big expansion candle, not in and out. It's good to slowly graduate from 20 points, all right, to 30 points, to 50 points, to eventually catch a whole 4 hour, maybe 6 hour, then a daily range, right? Because that's what your goal is in the first place. So if you know what I'm gonna teach right now, that's the goal, to catch a whole 6 hour range. Right. At the same time, you will not try to show a bullish expansion candle. You will not try to long a bearish expansion candle. 6 hour, right? Remember, 6 hour leads, not the 4 hour. It's the 6 hour. If you wanna choose one single specific time frame, use the 6 hour. Right? The hourly, 30 minute, and the 5 minute. That's all you need. Or the 15. Anything below the 15 is useless, in my opinion. If you wanna get really precise, use the 5. All right. You might be wondering how can I determine a choppy candle from an expansion candle? By coming to the basics. What's basics? Open low high close, open high low close, right? Within the 6 hour candle, you will have an Asian range. What's an Asian range? With if you have been following my Twitter, it's a specific time frame where you need to wait for a setup to form. A range. It's not called Asia because it's Asian session. It's called Asia because that's the time of a range of a market. It's not an Asian range. It's a range. London is not a range. It's manipulation to lead to an expansion, continuation, and then reversal. A classic buy or sell day. The same thing you're gonna do with the 6 hour candle. Right? I'm in the 15-minute time frame in here. What do we got in here? Right? We got right here is the 6 a.m. Uh, and then what I got here. So how many hours is there on a 6 hour candle? And why do I always have 6 a.m. opened in my chart? So we got 6, 7 is gonna be your Asian range. 6, 7, all right. And then what we got? 8 is the start of London session, is the start of the manipulation. By 8, you want to be in a position. 8 to 10, you want to lead the silver bullet, which is why ICT in the first place called it a silver bullet. He looked for a classic buy candle open. By the way, this is called RMD, not AMD. No matter how the candle opens, you still want to reverse it if you're confident in the door. So we have open, range, total soup, low of the candle, expansion, 9 a.m. does what? The key, 9 a.m. Retracement, 10 a.m. Silver bullet, expansion. You want to be here. This is the difficult one. This is the retracement, or B, whatever. And then this is the expansion. All right. So this is the simple framework. All right. Now, from now on, whatever I say, I want you guys to dig deeper. I want you guys to stay focused because I'm going to say some stuff behind the lines that I want you guys to discover. I I'm gonna make it kindergarten, but it's not. Alright, it's for the ones who actually want to look into this and to use it. And as you guys can know, you guys know, time is fractal, right? The whole charts are fractal. So whatever I say, I amplify in here. It's useful in every single candle. Alright. So as I said, within the 6 hour, you will have a range. 6 to 8 is gonna be a range. You want to clean your bed, as I said on Twitter, right? Then your London manipulation, 8 to 10. Then your New York continuation, 10 to 12. And what mainly causes the silver bullet, I said, right? If the 6 hour open and ranges at 6 and 7, you need to be in a position at a key time. What do I mean by a key time? 8:30. All right, take note, 8:30 for a specific reason. 8:30, not 8, 8:30. All right, and we're gonna discover that later on. 9 a.m., 9:30, or 10 as a high risk, high reward trade, right? Or you can play safe, wait for the 2 hour candle open. Yes, the 2 hour, not the 1 hour. 2 hour are the best intraday time frame for a specific reason that you guys have to find out. 2 hours are the 2 hour time frame is better than 1 hour. All right. If the 6 a.m. opens and rally, all right, what's the best time to expect a reaction from the candle? That's a smart question. Because even if you are in a wrong side, say you're longing a bearish distribution candle, right? You still can get a protraction or a retracement at a midpoint of a candle, right? So the time you should be looking for a trade, if we had an open rally, right? Open high and you're bearish, or open high and you're bullish. It doesn't matter. The time you should be looking at a setup is 9 a.m. if it doesn't open in your favor. Midpoint of the candles are super significant and super important, which happens to be 9 a.m., right? My model for it's 9 a.m. for a reason. It's not because 9:30 is fast. It's 9 a.m. because it happens to be midpoint of this, open of this, all right? The number, stuff like that, that you guys, I want you guys to discover. All right. Once you identify where's the SMR, the low of the manipulation, all right, move should not or should be your stop loss. Manipulation lows or highs between 8 to 10 is especially at 8:30 or 9:30. These lows are very strong and you should use them as your stop loss. If it gets taken, your doll or your expansion candle is probably wrong. All right. So before we move on, I'm gonna put everything I just said and implement it in this chart right here. All right. What do we got in here? This was from Friday, which was my long, right? Which I missed my entry in here. I still got it in here, right? 6 a.m. open. It opens, creates a clear range in here, right? A clear defined range. Sell side, buy side, right? And a range inside. All right. And I'm gonna say what I was bullish in here, not bearish after this big dump. So we got 6 to 8, a range forming. All right. Perfect. Or 6 a.m. and 7 a.m. were a range. That's what I like to see. Now for at 8, what do we got? An open, rally down. Right? If we have an open and then an instant rally, I need you to be looking for a reaction of that specific candle at a midpoint of that candle, of the hourly candle, which happens to be 8:30, right? Open rally, midpoint, open low, expansion, right? We soup the range low, which was initially right here, right? We soup the range low, and then we truly break above this high, all right? Now, when do you expect a reaction? You don't expect a full expansion, right? When do you expect a reaction from a classic buy candle at midpoint? What do we have at 9? We have a retracement back down inside the range, right? 9 retraces back down. Did this low get taken? It doesn't, simply because it's a manipulation low, right? It's a low that should not be taken because this is the low of the 6-hour movement. This should not get taken. This is your stop loss. I don't care if you enter here, 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 or here. This is your stop loss. You need to be risking the whole PD array or the manipulation low itself. All right, plus this SMT right here, whatever, right? And the midpoint retracement, and then once we have a 10 a.m. driving news, right? You expect 10 to be the main move, not 9. 10 will be the move. All right. In here we have 9 a.m. chop. Usually it's gonna be 9 a.m. retracement, 10 a.m. expansion, or 9:30 retracement, 10 a.m. expansion. But since we have 10 a.m. news, we have what? 9 a.m. chop, 10 a.m. expansion. All right. Again, 6 a.m. range, 8 a.m., 8:30 key time. All right. Open low. The midpoint of that specific manipulation candle is gonna explode above these highs. All right. It's gonna open low, explode above the highs. You immediately do not expect this to get taken. Whoever shorts in here thinks that these relative equal lows gonna get taken. It's not, because we are in a classic buy day, classic buy candle, which will cause this explosive move up. All right. And then what we got? Retracement, and then another expansion leg. All right, all the way up. And then any PD arrays in here will work. Any SMT PD array will work in here. All right.
That's saucy right there, bro.
Yeah. Is it
And
understood? Can I open the charts in here? Oh, I can.
Yeah.
Does anyone have any questions so far, or should I keep going?
Any PD race in a distribution candle will work.
Can you repeat key times? I think he got you. 8:30, 9:30. These two are very important. All right. If 8:30 is gonna manipulate, 9:30 is gonna expand. If 8:30 is gonna do 9:30 is gonna expand or retrace. If they're correlated, 8:30 and 9:30 works together. All right, it works one another. If one ranges, one do this. If one of them manipulate, another's gonna expand. Blah blah blah. Right. All right. What do you mean by three is your friend, six is your enemy, and nine is your god? And this is, my friend, something for you to discover. I'm not gonna give everything today, all right? Otherwise, it's gonna be boring. Plus, you guys will get overwhelmed by the amount of. I wanna go as slow as possible, all right? Someone said the midpoint of the candles. Let me try this for you. All right, this is a classic buy candle. All right, this move right here, this move, this retracement, if you're wrong, is gonna happen anyway. You know at what time? You know at what time this will happen? Midpoint of the candle. It's always gonna form a reaction, which is why 12 is 12, right? Which is why lunch, it's not lunch, it's something else. All right? It's not called lunch because people go out to eat. All right? It's lunch because some specific candle, oh, I wonder the 6 hour candle opens. And why did I say whenever a bigger time frame candle opens, wait for a first 2 hour or 2 hours range. Oh, what's this? 6 a.m. This is the lunch, right? 12. Uh, what happened in here? Even it was a choppy candle. What's this? 12. First candle, second hour does what? Expands. Third hour does what? 12. Right? 12 and 1 range. 2 p.m. opens, turtle soup, expands. Oh, what's that? I wonder what's that, right? All right, whatever. This is the beauty of the midpoint of the candles, which I want you to look for. Uh, I want you to look for even more. All right, this is just the start of this. All right, let's move. I think we had this expansion day right here. Yeah, right here. So I'm gonna ignore why you short in here. I'm gonna just use the framework. All right. What happened? This is the first case if we open range. Now, what if the 6 hour opens high, right? Or opens low? In this example, we had the 6 hour in here opens. It opens right here, right? All right, here. So it opens rally, right? If we're at all-time highs and you don't have anything on the left, what's your friend in here? Time. If you're blindly trading without time, you're pretty much gambling, in my opinion. Your only friend in here is time, which happens to we reverse at what time? 8:30. We start flushing at what time? 9 a.m. We have a break above this specific low at what time? 9:30. If y'all still think that you can just purely trade rangers without time, y'all fooling yourselves. If y'all think that you can see what is it called, Zephy? I see uh CR if y'all think that all you need is CRT,
CRT, yeah.
yeah, CRT without time, it's pretty much fooling yourself. Because this was CRT did not reverse. This was CRT did not work. Many things without time won't work. All right. What did we have here? 6 a.m. open. rally, 6 to 8. 8 opens high, midpoint happens to be in employment claims, random, right? We have form a range. This specific candle caused this move right here. This 830 caused this move, right? 830 opens, create a range to be total souped. We total soup it, close below it, all right? CISD, and then we start expanding. 9 a.m. opens. It doesn't play by PO3 ranges, PO3 rules. It doesn't open high then reverse. It just opens and flushes. That's the strongest sign that the algorithm is rushing for something, right? And the rest of the day we did what? Completely ignore any bullish PD raise. Just a flush down, right?
Classic sell day.
Yeah, right. 8, 8:30, 9 a.m. midpoint, fully reverse the candle. Here we close below it. 9:30 we should already close. The candle closed bearish, or 9:30 turned the bullish the sorry the candle bearish. It was bullish, it turned bearish. All right, this specific candle did the work, and then 9:30 did another job. This did the job. This did another job. Is 8:30? Yeah, I think let's focus on 8:30. Just see what it did. All right. But your main focus should be what the 6 hour did and what that does it look like, and did it sweep the previous 6 hour? All right. And after identifying all of that, look what 8 a.m. did, and then look what 9 a.m. is doing, because you should be at the chart at 9 a.m. or 8:30. Look what 9 a.m. is doing. What it's reaching for? Are you expecting classic or buy or sell candle? All right. We use 6 hour without higher time frame. Nah, your main analysis should be at the daily. All right. Because there is no way you can be bullish in here without using the weekly profile. All right. Classic sell week, Thursday packs the high of week, retrace back inside the range. All right. There is no way we can reverse like this beside even Wednesday, which was Nvidia. So it's not possible. So we expect what? Thursday to pack the high of week at a key time, which is what? 9 a.m. 9 made the 6 hour candle a true CISD should not. Yeah, yeah, exactly, Austin. Yeah. All right. Let me get the chat in here and let me keep going. All right. What I just teach right now, all right, will answer pretty much everything you were asking for. And I'm gonna give you a hint. It will answer which 15 minute of the hour you should be looking to enter. You should be answering which 5 minute of the 15 minute you should be entering. It will answer which 2 hour candle you should be picking, which hourly candle you should be picking. Remember, only one specific higher time frame candle can 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 make you financially free, which what happened to me. This beauty, this single thing right here, this is the key of what you're looking for. Obviously, this is just an introduction, right? Of what it's got, of what I'm gonna present later on, either on my Discord or on the Discord on Dynamic, either on Twitter or maybe another webinar, right? But take this as a base, right? And then use it on every single fucking higher time frame candle you can use. All right, because now all you need to find, once you know where the 6 hour is going, all you need to find is PD rays. All right. The same thing. Let me show you this. The same thing happened in here. All right. Where does the midnight? All right. This is midnight. It opens, declines. 3 a.m. does what? Midpoint of the candle digs into a specific low, all right? It's not a random low, a specific low, and the midnight to 2 a.m. range. Sweeps it, reverse. And notice which 15-minute reverse, not 3 a.m. 3 a.m. forms a range, 3:15 digs into the range, and then we truly reverse. And then we start forming PD arrays. I and respecting them, another 6 hour opens, classic buy candle. Do you use the 3 hour? Oh yeah, yeah I do. Yeah. All right. Your homework now is to study 12 a.m. Why does it retrace or give reaction? All right. And what does the 1 p.m. almost always do? It's 6 hour and 4 hour goes in one hand. It's related. Once the midpoint of one of them comes, it's usually the open of the other one. Or sometimes they open together. What about 2 p.m. and 2 a.m.? 2 p.m. It's up to you to find out. 2 a.m. is a key time too, for a specific reason too. Because you can pick either 2 hours as a range. It depends on where we are. You can pick the first hour as your range or your first 2 hours. This is also something for you to find out. All right. And then within the 9 a.m., 9 a.m. is the big puzzle. Between all of these, the 9 a.m. is your biggest puzzle. Because once you find out what this candle is about to do, you only have to trade 1 minute of your whole day, or like say 10 minutes of your whole day. This candle is your puzzle. And this, what I gave you right now, is the guide. All right, London, Asia, New York, 9 a.m. does what? What did Asia do? What will 9 a.m. do? What did London do? Right? What did the first 6 hour, the second 6 hour? What do you expect? Like stuff like that, right? As I said, your homework is to study 12 a.m. Why does it retrace or give reaction? And what does 1 p.m. almost always do? If you know that we get a reaction at 9 a.m., then 10 a.m. will be a continuation, silver bullet, like ICT calls it, or claims to call it, right? If you do the same framework with 12 a.m., you'll find some good stuff. Do you incorporate key levels, bro? If you trade with no key levels, you're gambling as well. First thing, all right, which I fully give credits to Romeo too, market profiling. Second thing, draw on liquidity, though. All right, these comes first. All right, these should be your base. Second will be the time plus the ranges. Time and ranges second. Third should be the entry model and your stop loss. Stop loss is more important than your TP, in my opinion, because that will eat your PNL. If you don't know where to put your stop loss, that will eat your PNL. Say you want to enter at this key level, right? Uh, you use your favorite 1 minute chart since you don't like that. This is the tap into your key level. You enter, it rallies, and then you put a break even, it gets stopped out, right? Say you enter in here. Oh shit, my bad. Say you enter in here. All right, enter wherever. It comes back, stop you at break even. You re-enter in here. Same thing. You get stopped out because you have 5 point stop, right? You get stopped out. You re-enter in here. You get stopped out. You re-enter in here. You get stopped out. You re-enter in here. It comes back. You think you actually caught the breakout. It comes back. You re-enter in here and you finally catch the move, or your account is blown. All right. But if you enter at the worst possible position and you got your stop below 830, will that be hit? This is 18 points, and say you know a true breakout is coming. If you do this, this is why stop loss is so important. You will have to go through all of this, right? So, but your stop loss is not gonna get hit. So stop loss, or before that is gonna be time. You don't want to sit through all of this. You want to catch this or this, all right? Or since I missed this and I don't like trading 10 a.m. or the end of the hour, right? This got taken at a time I don't like. I enter right here, which is a puzzle, right? Why I don't expect a retracement? Why was my stop loss in here below this low? All right, not below this candle, not below this candle, not below this candle. It was below this. And why have I not targeted? Why have I not targeted this high? It's still a puzzle, right? Why this high does not need to be taken. Neither all-time highs. If you see this pump, you will expect this high, right? Or at least this high, but none got taken. So again, this for your studies. And as you can see right here, if you enter without time with the correct stop loss, you will have to go through all of this, but you're still gonna get a win. If you enter with time and incorrect stop loss, say you enter at 9:30, right? It still comes back down, right? So no valid stop loss means you get stopped. It means you get stopped out, right? Once you choose the right time and the right stop loss, you get the best moves without needing to re-enter 10,000 times because this is something I was doing before. Uh, Trying to get that 3 point, 4 point stop loss, not risking that much or over leveraging, doing a tight stop. This will fuck up your P&L. Go with the good, accept the risk, good leverage, all right? Enter with where your stop loss should be. And people will not put it in here saying that, or people entering short saying this is relative equal lows. Relative equal lows with no narrative is useless. Useless. All right, everything understood? If yes, please drop something on the chat saying yes or whatever. Yes, yes. All right, nice. Yes, sir. I hope it was, yeah, thank you, Ozen. I hope it was pretty simple because I know so many new people are in here, so I wanna make it as simple as not complicated as kindergarten as I could, bro. All right, for the advanced people, I'm sorry, you just bear with me. All right, I just want everyone to understand in here, and I don't want anyone to be left behind. All right, so I hope it was all put together, and I'm gonna do stuff like this later on Twitter. All right, me and the boys. So yeah, that was it for me, Zefi. Should we move to your presentation or Johnny's?
Let's do Johnny's. Yeah, I'm gonna keep mine for last. Best for last.
All right,
Uh,
let me stop
Damn, bro,
sharing.
you calling it unicorn shit or what?
no, 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 no,
Nah, I'm
no,
just playing. I'm
no,
just
no, no,
kidding.
no, no. It works. The true uni works. This one is just you can technically pattern trade it, but that's why I'm gonna save it last for last.
Yes,
Go
sir.
ahead, Johnny. Go ahead.
All right, but Uzi, you're gonna have to.
Yeah, hold on. Give me a sec. Let me answer. Please, I don't understand English. I'll try with ChatGPT. The first range you hired is the 2 hour after opening the 6 a.m. candle. All right, man. I can pretty much say that you're Arab, so if you can just use specifically DM just because of the effort you did, you can just DM me on Discord. My Discord is you can find me on Dynamic. DM me and I will explain it to you with your own language. I can speak Arabic, French, Spanish, or English. I
Bro, you can speak Spanish?
Yeah, bro.
No way.
Don't. All right, Johnny, don't start it out right here, bro. All right. Go ahead. I'm gonna
Yo,
stop sharing.
nah, we have to hear a little bit of Spanish from the boy.
Nah, bro. Nah, go ahead. Give me a sec. I'll be right back. You can start it off, Johnny.
He said, man, all
He
right, I got
said,
you.
Chupapi muñeño? Oh, hell no.
He's like, I'll be back. All right,
Uh,
all right, let me see. All right, can you guys see?
Yes.
yo.
Alrighty, guys. Well, welcome. I appreciate everybody pulling up today. I'm going to be going over the true unicorn model. A lot of you guys probably already know what the unicorn model is. It's basically you have a low, a high, lower low, and then a break, retest, breaker block, fair value gap combo, all that good stuff, right? But by a show of hands, do you guys know what the true unicorn model is? Let me see in the chat. Does anybody know what the true unicorn is?
Got some
Somebody said yeah.
no's and some yes.
Yes. Okay. Okay, so most of you guys that don't know what the true unicorn model is, it's basically your highest probability unicorns that you can catch in the market, okay? So, what is the strongest signature in price to indicate that we're going to flip from bullish to bearish or bearish to bullish? It's the unicorn, right? This is why ICT likes it. It's one of his favorite models, and it's also one of my favorite models just because of the simplicity of it, and also because it is the strongest signature in price to indicate that we are going to flip from bull to bear or bear to bull, right? But it goes deeper. Okay, everybody knows what a bullish unicorn is, right? It's a low, high, lower, low, break, breaker block, fair value gap combo, vice versa with the bearish, right? It's a high, low, higher, high break of that low, retest into the breaker and fair value gap. Okay, it's basically an overlapping of those two PD arrays that makes it a unicorn. Everybody knows what a unicorn is, right? But not a lot of people will teach what a true unicorn is. Okay. Now, the unicorn versus the true unicorn model. Okay. The unicorn model consists again of a breaker block and a fair value gap overlap combo. Okay. But the true unicorn requires slightly different signatures in price. Okay. This will be your strongest and highest probability unicorns. All right. We can look at the requirements for a true unicorn, and we're going to go over a bullish example for a true unicorn. Okay. So what you guys want to do is focus on that last swing high that took the low, right? The liquidity sweep. It needs to be an intermediate high, meaning a high prior to an FVG. So go back over here and we look at the bullish example. You want to focus on this high right here that took that low. Okay. That's going to be an important high. Does everybody know why that's an important high?
Yeah,
Why,
bro.
why, why is the high, why is that an important high? The high that took the low, correct? Okay. So if price retraces and breaks that last high that took the low, it needs to be broken with a fair value gap. Okay. What this is basically a unicorn with a balanced price range. Okay. These are the strongest signatures in price that will show us when we are going to flip. This is a real break of structure. Okay. The break of structure that everybody teaches nowadays is not a real break of structure. It's not just a fucking break of any high or whatever. And then you just market enter and hope for the best, right? A lot of people get clapped just doing that. Okay. Again, these are the strongest signatures in price that will show us when we're going to flip. It's a real break of structure, and these are the highest probability unicorns. Okay. In summary, the high that you are taking the unicorn on, it needs to be the last high that took the low. It needs to be prior to an FEG, and it needs to break the high with an FEG. That is a true unicorn. Okay. Let's look at some examples real quick. All right. So most of you guys, okay, first off, who banked on Thursday? Who caught this move on Thursday? You guys? Okay. Okay. Well, I caught pretty much the top on this, but not on NQ. I caught it on ES. Okay. So if we look at the bearish example for a true bearish unicorn, it's this last swing low that makes the high, right? It's the last swing low. It's this intermediate swing low right here in this fair value gap. Sends it up, makes a new high, and then we break it. Okay. We close a body below it. Okay. We wait for the next candle to open, close, do all that good stuff, right? Closes, makes a fair value gap. Okay, this is your true unicorn, right? Because this low made a new high, and now we broke that low, that important low. We used the fair value gap to push it up there, and now we broke it. And now we're retracing back up into this breaker, basically an inverse fair value gap as well, and then this bearish fair value gap. Okay, now you combine that with all the logic that Uzi pretty much explained to you, right? This candle right here was the 12 p.m. open, right? What did it do? Open high, SMT with ES, distribution to the downside, right? Drawing liquidity in the right context on these unicorns is very, very important, right? Without drawing liquidity, because drawing liquidity is the foundation to all of this, okay? Without knowing you're drawing liquidity, without knowing order flow, all that good stuff, you're going to get clapped pattern trading unicorns, okay? But these signatures in price, when you're using a fair value gap and you're creating an intermediate swing low that makes a new high or a new low and it gets broken through, these are your strongest signatures in price that is going to indicate that we are going to reverse for sure, okay? A lot of people get scared on this candle right here. I think it's going to go higher. But you have to wait for the key times, just like Uzi explained, right? What's the 12 p.m. candle? It's a new 6-hour opening, right? Now let's look at another example in the lower time frames, right? So we have an intermediate high right here, fair value gap, right? Go down, clear the low. We clear the external low over here. Then we start pushing back up. We close above the high that took that low. We have a little fair value gap right here, but it's still useful. And if you guys notice, the bodies are not closing below the top of this breaker block here. So you could enter anywhere here in this area, the order block, the fair value gap, the breaker block, aim for the external liquidity, which is all these highs right here. All right. And then another example here. This is a really good example right here. This was like if anybody caught this, this was a couple weeks ago. It's about a 7R right here. Sweep of the external, intermediate term high right here in the fair value gap. Sweep the lows. We break above. And sometimes people will tell me, okay, we don't have a body candle close above the high that broke the low, right? We don't have any bodies closing above it until we get to here. We barely close above it. You enter on the fair value gap or the bottom of that breaker block. You place your stop at the swing low. And this was a key time as well. I believe this was 8:30. Goes up, retest the fair value gap one more time, and then it starts pushing up and gunning for the external liquidity. This is your true unicorn. And again, these are the strongest signatures in price that is going to indicate a reversal from bearish to bullish. Okay. Let's see. I'm not looking at chat. Doesn't the full FEG need to be rebalanced with an intermediate high / low? What do you mean by that? No, it doesn't. It just needs to be the high prior to an FEG. For example, like this, like all these examples that I'm showing you. Okay. And that is basically your true unicorn model. A lot of times, a lot of people will try to just pattern trade unicorn models and they get clapped. Okay. Not knowing that you have to have certain signatures in price and you have to have the right context behind the unicorn model. You can't just pattern trade unicorn models and expect it to work. That's why a lot of people get clapped, and that's why a lot of people have been getting clapped just pattern trading unicorns. When you have these signatures in price, you can be confident that the unicorn that you're taking whenever you have these signatures in price is going to be a very good unicorn, right? Trade the logic. Yeah, exactly. This time frame is a 1-minute time frame, right? A unicorn model best used after a turtle soup. Yes. Right. So everything that Uzi explained a little bit ago about the key times, about the candle range theory, about the 6-hour openings, all that, you combine that logic with this, and most of the time after the turtle soup, and especially if you have these signatures that we pointed out in this webinar, you can be very, very confident that if you didn't catch the turtle soup, you can wait for the unicorn. Right? Because most of the time when we have these intermediate highs and we have this breaker block, this type of breaker block right here, these are going to be your high probability breaker blocks and your high probability unicorns. Okay. This is a very good entry model. Okay. And again, you have to have the right context, combining the logic that Uzi just said, right? Key times, all that good stuff. If you miss the turtle soup, if you didn't get in on a key level, this will become your key levels right here, your breaker block, and then you'll have all these signatures. and then you just slap this shit and you aim for the external liquidity on the higher time frame. Okay. Most of these highs were 15-minute swing highs. So you get in on the lower time frames, you aim for the higher time frame draw on liquidity. Okay. But yeah, I think that's pretty much it for my presentation. A lot of you guys already knew what unicorns were. I just gave you guys the signatures to watch out for a true unicorn model. So it's very straight to the point. I don't want to, I don't want to drag this on for too much, but I think these examples are more than enough for you guys to study when you play back the recording. So, Johnny, do you see there are basically three true unicorns in this example? Oh yeah, I mean, I do see that. There is another one right here as well. Right here. The low, take it up to the high, fair value gap, breakthrough, boom, take it down. But again, you have to recognize where you are on the chart. If order flow is bullish, bearish on the higher time frames. In this case, in this example, the higher time frame was bullish. The order flow was bullish. So we swept the external, the previous day low. You get some fire signatures here. Boom. You get those signatures that we talked about here. You slap that. Okay. He said a quick step short. All right. I think I'm pretty much done with my presentation. I hope you guys enjoyed. I'll let the boy Zephy present his MOC models. And yeah,
All
appreciate you
right,
guys
man.
pulling up.
All right. All right. So this is the MOC model. This model will be the simplest model out there with a very high win rate, as you guys can already tell by my Twitter post. This is the model that I used. Some of you may already know. This is also a testimonial from my VIP members using the MOC model. Okay. 15K MOC pass to 50K Apex. All right. Now, what is MOC? We need to understand what MOC stands for. MOC is market on close. The MOC macro is from 1545 to 16 EST, Eastern Standard Time, or 3:45 to 4 p.m. Eastern Standard Time. MOC will spool price towards the doll if it hasn't been met yet. If the doll has been met, MOC will most likely to consolidate or retrace. Okay. Now there are rules into this model. First, you mark out the 15:30 15-minute candle range in the 15-minute time frame. If there's an obvious higher time frame range in play, you can use that instead. Two, you mark key levels above or below the range. If there is no key level, you do not take an entry. Simple. Okay. Enter on the turtle soup, and generally you will see a quick move in the opposing direction. Partial at EQ and hold runner to the external. Okay, and enjoy your bag after that. So here's some example of how it works. Okay, now we have here is a 1545 where our entry is. This previous candle is the 1530. We turtle soup that candle of the low, open low, tapped a order block and a fair value gap at the same time. Okay, and then take in the range high. Again, this is what it looks like. Tapped the order block. We have SMT, fair value gap, and turtle soup this, and we also open low. Okay, that is crucial. You need to know if it's gonna be an open low or open high, right? So again, here's another example in the 1 minute time frame. We have the turtle soup, which is right here, the 15-minute order block, the 1 minute order block. It uses more confluence, SMT. Your TP is right here, which is your EQ, and then TP2 is right here, which is your range high. Okay. Here is more example of where I took this with 4 contract and I sell it at the range high. It taps this 5-minute order block in this gray area. Once it's swept or open low, goes to the high, target that range high. Okay. Now, this is the same thing here. Same PD race. We have a 5-minute fair value gap for this one. We tapped the range low, right? And then I entered right here once we swept turtle souped this. Took my position on the EQ of this. And the reason why I took it off at this down close candle is because we have an SMT. When there is a valid SMT, it's not going to go to the range high, okay? Now, this is another example. We have a 15-minute rejection block down here. Obviously, I targeted EQ off the range after turtle souping the range low, and then just left my runners all the way up to the range high, okay? So when I entered here, right, this, whenever it pulls back, it could have stopped you out, but at the time I kind of wanted this to play out, and yeah, so I just left it all the way up there. But yeah, so how does this look like in the actual like 15-minute, right? I'm gonna show you guys that right now. Okay, so in this example here, okay, and this is the first time I'm looking at this. We have the 1530, which is this one right here. Okay, 1530. Now, what I want you to do is go to the 15-minute. Okay, that wasn't the 15-minute. Sorry. Go right here. Now this is the 15-minute, 1530. What did we do here? We opened low, right? What PD ray did we use? Well, we have this fair value gap all the way over here, which use as our key level. What else do we have? We also have this rejection block here. Okay, we have this as a key level, this as a key level, soup. Okay, so this is our soup. This is our rejection block, and then our fair value gap key level. Open low, and then from there we took it from the range high to range low. The EQ has been hit. Okay, you can target the range high, but I think at this time it was yeah, well, market already closed. Okay, all right, so again, I'm gonna show you guys some more examples here. Right here. Now this one did not work. Why did this one not work? Well, as you can see, what did we do here, right? We open what? We open low. We don't want to take a candle that is open low, sweeping into the range high, right? We want to open high first. So we want a black candle, for example, like this, right? But since this candle did not sweep this candle, there's no trade here. And obviously there's also no key level on the highs or the lows, right? That we can use. Now, if it was to swept the low, like open low, and then we could use this, okay, we could use this rejection block, or you know, somewhere like over here, at PD array somewhere here. But in that case, it did not happen. So let's go to the next example. Right here, right? 1530. Now this one was very fast. Okay, so we open low here. What is the key level that we used? There's two. We have the order block, okay? This one right here. And then we also have the fair value gap, which is this right here, okay? Taps to both of those key level, open low, and then targets the range high, and then the EQ, and then the range high. Now, you might be wondering, yo, Zephy, how do you put your stop placement on this? Well, that's really up to you. Whenever you get in, you want to get in at the wick, right? So you can either, like, let's say you get in at the soup or the OB tap, right? You can either cover the whole fair value gap like this, okay, and then target, you know, the range high, which is for 53 points, but this is pretty wide stop. So what I always do is that once the low has been put in, I want to trust that low right here, right? I want to trust this low to hold, because if this low is broken, that means that the range is probably done. Okay, like that means that we're probably gonna go lower. All right. So again, let me give you guys some more examples here. Right here. Let me see if this one worked. 30 right here. This one did not work. Yeah. Why did this one not work? Well, that's because this range right here got taken out with an open low, right? We do not want to enter when it's like that, okay? We want it open high, so we wanted a black candle. Then we can target the opposite side, or open low up here, down here, and then we can target the high. Okay, it's very simple, guys. Very, very, technical, and there's not much to it. Let's see here, 15. Yep, right here. Now this one is this one worked, okay, because one, okay, what did this candle do right here at 15.45? We opened low, okay, but we didn't go all the way up to the range high, right? We only went to the EQ of this range. Okay, if you look at it, we stabbed it right there. We opened low, and then EQ got hit. What is the key level that we used here, right? There's several. Okay, well, there's this one here, which is the order block. Okay, the order block, and then we also have the rejection block right here as well. All right, very, very simple, guys. Okay, now let me do one more example. The 1530 right here. Yep. 30. Okay. Now this one we did open low, but this was like a really, really fast range, like a really short range. So open low, and with probably like a smaller key level here that we used. Can't really mark that up because I want to focus just on the 15-minute time frame, right? All right. Let me give you guys a couple more. Okay. Now I want you guys to back test this on different pairs, not just NQ like what I'm doing, right? All right. So yeah, this one did not work out. Why? Because we opened high first and then it never purged the right side, right? And yeah, so let me give you couple more here. Yep. All right. So with this, it did work because we opened low right here. We used this rejection block as the key level. Okay. And I mean, you can say we also use this for value gap as well, because we literally like tapped it to the tick and then goes up, taking the range high. Okay. All right. Let me see. 1530. All right, right here. Okay. This one did work. Now this one, we open high. Okay, taking this out. Now you're probably wondering what is, what is the adhere, or what is the key level here? Well, you can use highs and lows. Those highs and lows are still a key level. Okay. The only three things that I use for key levels, well, actually, technically, it would be like 5, but it would be highs, lows, a rejection block, order block, and fair value gap in the 15-minute. Okay. Now, you might be wondering, what is a rejection block? Okay. Rejection block is just the wick of an OB. Okay. Now, that's pretty much it, guys. Yeah. If you guys have any questions, let me know in the comments below. If you guys have any questions about other things, feel free to join our Discord, our free Discord. We do have a sale at the moment for the VIP and the lifetime member. It is going to be shown right here on the screen for the Memorial Day. It does expire on June 4th, 2024. So if you guys want to cop that, feel free to do so. But yeah, guys, I'm gonna end the stream here. I'll talk to you guys later. Peace.